Hello, everyone. Welcome back to the rationalinvestor.co. Big Merry Christmas and Happy Holidays to everybody out there. We're going to do a public version of our daily brief here. Just so, a nice little public service here. Hope people enjoy the video and you get an idea of what we sort of do on a daily basis with our daily briefs. Probably best to start off over... Well, we won't talk too much about stock market. This will be primarily about crypto and Bitcoin. But let's pop on over, take a look at the book, and see what we got. All right, we got all our site messages from everybody. What we like to do, we have an internal algorithm that we run on the stock market. We have our proprietary Delacour index algo and our signaling firing system as well. We like to cover the breadth of the market. I see Michael's here. Hi, Michael. Nice to see you pop in. Michael's going to be our audio check. So does everything sound audio perfect here? I hope it does. Anyway, long and short of it here, like I said, I'm not going to go too much into the stock market here in this video, but long and short of it here, the breadth of the market, you can clearly see that things are kind of rolling over here. The short-term breadth of the market is breaking. And if we look at just price action itself, it's tough to see off of just this little chart here, but long and short of it here, market's coming off a long way since the election. And I think we're getting sort of a buy the rumor and then into inauguration day, sell the news kind of idea. You can see coming out of the election, we had a nice little bottom in breadth, and the market just surged higher. And now you can see that that breadth is starting to break. But like I said, we're not going to go too much in the stock market here in this video. We're going to talk about Bitcoin. Bitcoin tastes great. Okay, where should we begin? I think probably, just a good sort of overview for the public audience, because just so you're aware, Michael, this is on YouTube right now, so I don't know if anybody's watching or not, but we'll have some fun here. We had this bullish bot set up working for quite some time on Bitcoin. Actually, Michael was even pointing out in the lounge that Phoenix, this was all through the hack event, and price action was a little splotchy here. Once the sort of situation had stabilized, and you can see this cute little W that came in on price, and then we started to work up and we came back to this resistance level, then we backed off, then we came back up to this resistance level and consolidated. At that point, I was willing to entertain the idea that, hey, maybe this Phoenix hack isn't going to be a total nightmare, and we might be, doing continuation patterns as we sort of, work our way higher. And this is, on the backdrop, the context of, we'll probably use Stamp here. This isn't a bad example. This is in the context of a much broader bull run, right? Here was the technical bottom back in 2015. And really, I think what the hallmark of this bottom was, especially those that really like fundamental analysis, is just this idea that what was the actual cost to keep the Bitcoin network going? That's, what is sort of miners break-even level. And the debate through this time period was those that had electricity subsidized to them, their average cost was about $150 to $200. And those people that had to pay for electricity, their cost was about $300. So it really shouldn't surprise us looking back in hindsight why Bitcoin's price bottomed where it did. As well, there's an old adage that says that usually markets like, especially, when you see a market go up this far, this fast, very much like this, and, Michael attests to it. We've seen lots of this in altcoin land. Altcoins love to do this. Sometimes when you get a market that goes up like this growth just simply isn't sustainable. And quite often we have an old saying in the stock market that odds are you're probably going to see this retrace about 80% of this move. So, if we have a peak here of 1100 and change, whatever, 80% of that's going to take us back down to, a couple $100, somewhere in that neighborhood. So, big surprise. That's basically what we did. And then we, coming out of our ultimate bottom here, We had a nice fundamental event, which was the U.S. Marshal Office's auctioning of Bitcoins. And keep in mind, the last U.S. government auction, Marshall's auction, was right here. And so it was an opportunity to bring Bitcoin into the public's attention. And kind of like what we're talking about in the lounge today, I think basically the professionals marked up Bitcoin prices so that anybody that sort of, opened up their newspaper or whatever they do on, on these days, turned on their internet, whatever your news source is, and you see these headlines, oh, Bitcoin government auction, and people are like, oh yeah, I remember Bitcoin, I was going to go buy some of that. If they participated in the market around that event, they basically paid top dollar for their Bitcoins. And of course, shortly thereafter, the price retraced. I think, it's a great public service announcement, guys. Anybody watching this video out on the internet, Bitcoin loves 61.8. I mean, it just loves 61.8. If we do all of these studies here, it's absolutely astounding how often 61.8s play in. And, if you are interested in buying Bitcoins, but you don't want to get sucked into any euphoria, I highly, highly recommend to just simply identify where sort of the previous pivot in the market is. And in this particular case, this was the pre-government auction. And this rally peak right here was a perfect 61.8 of this range here, but I don't have that on this chart. But in essence, identify the range where the rally started and just work your bid at the 61.8. I mean, it's just stunning how often this works. And there was a guy that I used to trade in the futures pits that used to live by that. And so in our school, in our community, we give that a name. It's called the Mountain Man level. And if you ever see any of my sort of published charts on the net, I often I'll put a big M right on that 61.8 like that to denote Brandon, a very, very good crude oil futures trader. Okay, so moving on, post-November event, auction. I thought it was really interesting when I did a clothesline Gann study, and this is just simply measuring, if we go back to a clothesline basis. This is simply measuring the extreme closing pivots. And I also noticed too, I mean, I think it's pretty important, when you look at Stamp's original top, this isn't just a V top, right? This is actually an M top. There was two serious closes right up in this area. So I think that's actually a pretty important level right in there. Regardless, when I drew the Gann study off of that, and then I projected it off of this closing low, and keep in mind, we technicians, we're constantly saying, okay, well, what would happen if I did it off of this low? What would happen if I did it off this low? I just personally found that the levels really jumped out at me, and really most importantly, this arc really, like I like to call this a speed bump in sort of my teaching. And you can see how, this speed bump had bounced off of that, and then we lost it, and you can see how she tried to come up and recapture it, and then we had to work our way down to this speed bump. And what I find interesting too off of this Gann study using these squares, horizontal support and resistance, and then also these vertical lines as sort of a time window, I thought it was more than a coincidence that there was just one hell of a pivot right through this apex of this square here. And I kind of been thinking that, the current phase that Bitcoin is in is we're basically in this square now. So we were in this square and we lost it for a bit and recaptured it. And now it feels like we're working our way through this square. So with that said, Elliott waivers are kind of like, 5 waves, 1, 2, 3, 4, 5. Are we getting up near the end of this rally? I don't think it would be shocking to start thinking that way. As well, too, I noticed that these subsequent bursts out of ranges here, These 1618 to 200% that I have on the chart here, I like to call this my parking garage analogy, where quite often what the market's doing here is it's established a range, and keep in mind this is off of entire ranges, so you can see that's a little bit off there. But you know, if we just put it back to candles, you'll see that. What I often find is that markets, when they break out of a range, really all they really want to do is just go and explore exactly equal distance range higher. So it really shouldn't surprise us that this thing stopped at 200% here. In essence, think parking garage. It's a really great way to think of the market. And then when we established this range, right, and we broke out, there is the next parking garage. And actually, we even extended beyond that, but you can really see how that level was in play. And even so here as well. After this clean up and look at the 61.8 tag, right, and right back into our speed bump, boom. You know, and here, this is a great example where the speed bump just keeps getting rejected. The market just doesn't have enough inertia to punch through the speed bump, and it just keeps gets buffeted. So anyway, the point that I'm trying to make here is that on our most recent breakout, and think, you know, Elliott wave 1, 2, 3. In fact, here, why don't we even do the Elliott wave study? Something along these lines. I don't ever claim to be an Elliott wave expert, so don't bitch at me if you think these levels are off. Something along those lines. 1, 2, 3, 4, 5, right? And usually they say the fifth wave is actually smaller than the third wave. So I don't know whether we, you know, I suppose we can start it there. We should keep an eye on this size of 0.2 to 3 here, and 4 to 5 really shouldn't be bigger than 2 to 3. If this ends up topping out up in here, then that could very easily be a nice Elliott wave pattern. So keep an eye out for that topping pattern, guys. All right, so back to our story here. Notice here is parking garage again. And notice too that we're also, you know, parking garage, we're up against the highest levels of the Gann angles, that if this is still technically a bear, it should buffet it off of these. And it was interesting, I was doing some work recently with triangles and the spiral. And I haven't done like a complete study of it yet, so this is, I'm just eyeballing this for the purposes of this. But it almost feels like, you know, especially if we look at like this cycle in here, if you had taken the same sort of principle, and again, I'm not quite sure exactly where I'm supposed to draw these. I'm certainly not going to, you know, pretend myself as some sort of expert on this. But I think probably something along these lines. I don't know where exactly it is, right? But it's a work in progress for me. I'm certainly not going to bill myself as some sort of expert on this. But what I did notice was, where is the spirally spiral? There is some sort of relationship here, and I have to find the darn tool first. Maybe it's over here. Yeah, here it is. And it goes something like you actually take the measurement off of, oh God, I got so many boxes on here, I can't even see it. Anyway, you take the measurement of the sort of midpoint of the, oh boy, now I'm just going to mess things up. The midpoint of the triangle, and you draw your spiral, and what should end up happening is these highs should actually correspond with this spiral level. Probably not the best idea for me to try and do this on a fly. I should have probably already had this already pre-done for you guys, but no big deal. Anyway, the point of the matter here is I'm wondering whether there is this massive spiral that's trying to develop here. And if we take that just sort of same principle, and remember that this was some sort of key pivot in here, and we draw out that same sort of spirally concept, and I can't remember how the hell to do this just off the top of my head. We should see, it goes something like this. We should see if I've drawn this correctly, and it might even be right off of there. We should see, yeah, something along these lines, where price comes up and it consolidates, and then it has one more final push, and then the final push down into here is actually the release point, and it's at this point that we should look for the major launch higher. So thinking spiralies, and I might even work on this through the day and maybe fine tune it a little bit better. I'm wondering whether, you know, a nice little top up here and a nice little cleanup might be well and good and in order here. And I also find too that, you know, again, if we apply our simple mountain man level, you know, I really do not like the idea of people chasing. And, you know, Michael was even commenting earlier today about how he was starting to see Reddit posts and stuff about people mortgaging houses and stuff to go and buy Bitcoins. And oh boy, that just scares the hell out of me. I do love the idea that you just simply watch whatever top comes in here, and who knows where it is, and you just take your fib tool and you just watch. And when the break happens, and keep in mind, this is Bitcoin, there will be a break. You just have your bid working at good old mountain man level, right? That's that. If I was talking to the public, that's the way I would approach it. I don't know whether it's here. You know, it's interesting just in the very short term. We're getting faily type patterns in here. We got an inside bar that's potentially trying to form here. Let's maybe just lock that into place. Was there any other study I had on here? Nope, that's it. Okay, so let's go like this and like that and then like that. All right, so we can see a potential inside bar forming right off of this Gann angle. You can notice that we accepted back above the arc, so we've got some room to play with down in here. We might even play a little bit of ping pong between these arc levels. But when they break this, you'll know the break, right? It's gonna look something crazy like this or something crazy like this. And actually, you remember I was just saying a few minutes ago about those triangles in the spiral, right? Before I lose this image. Brian, having fun. Woohoo! Christmas Eve, charting shirts. Something along those lines, right? And then, and are you enjoying the show, Michael? I hope you are enjoying the show. How the hell do I do this? I can't even remember. It takes me forever to remember how the hell to do this. Is it this way? Oh, fudge, I forgot. Anyway, it's something along those lines. You got to do a triangle within a triangle. Something like, but then this is locked, isn't it? So that's what's messing me up. Anyway, something like that. So I'm not saying this is scientific. Don't get me wrong. Just eyeballing this for everybody. Okay, so there we go. So we went up against the top of the arc. We had to come down, and it was the bullish resolution of the arc coming down. We got to see that arc a little bit better here. Let's go. There we go. All right. So, and I'm just eyeballing this, guys, right? So the triangle principle is just simply that we reach an apex of the triangle, and then that's the time when we can release. And I'm wondering whether our recent run-up is looking very similar like this off of the massive time frame. Right, so that's, hopefully you guys can see the similarities in this correction and the massive potential triangle that's forming. I don't know whether you can or not. Yeah, Garrett, pop on in if you want. Okay, so long and short of it here, bullish harmonics. Been talking about this on Coinage shows and for quite some time. We had half decent looking buy signals coming out of these lows and following in the heels of the Phoenix hack. Holy shit, what the hell just happened? Okay, let's shake off the dust. Are we going to put in higher lows and higher highs? Yep, we've got higher lows. Now we've got a nice little cup and handle. Right off the bot entry level, which basically sets up a 3-to-1 risk reward setup. I mean, that's really what we're talking about here is, we as traders, we trade setups. We just simply want to hunt for conditions where more than half the time, and ideally I'd love for you to get that up into the 60% area, you know, 60s. If you're on a hot streak, you might go like 70, 80%. But the long and short of it here is I think it's realistic we can get up into the 60s. And I think that's a good goal for everybody to shoot for. But when you're right, you're going to be paid substantially more than when you're wrong. I mean, that's really what this all comes down to. We don't know. I mean, there could have been another Phoenix hack right on the heels of this, and this thing just craps out and boom, the bot got stopped. You don't know. And the fact that this did work just simply vets the fact that markets like to move in this harmonic pattern. And given our sort of higher time frame perspective and this sort of Elliott wave, you know, massive cycle, markets range 80% of the time. So we should expect a reload zone test up in here anyway. You know, a shorter time frame harmonics that are suggesting the bias is up for us to go and test tops, ends of the ranges. I think it all just makes sense that, yeah, we just basically hit a harmonic objective in the marketplace. I don't know if this is the top. Nobody does. And I think I put out a tweet just last night basically saying, you know, especially when you get into things like blow off tops, it's almost impossible to, in my opinion, to basically call tops exactly and bottoms exactly. I mean, every once in a while you get lucky, but last night I even tweeted out, blow off tops are hard to predict. Here are some levels. And, you know, basically I was tweeting out saying that, you know, we're done. Our upside objectives have been hit, but I don't know if this is a short here or not. And so now as sort of traders, we just simply need to watch for levels, right? And just watch the market. You know, clearly after a period of consolidation and sideways action, we're now in that sort of parabolic face rip mode. And my advice to you guys, and I think it's just good general advice, is try not to be a hero and call tops in here, because this might just rip your face off. You just don't know. I can understand guys who are taking setups, you know, people that are a little bit more mature, working with trading plans. You know, I know a few guys that are alumni of the program, and they're, you know, running altcoin funds, and so they're in there stepping in there, hunting shorts and being disciplined. And if their levels get stopped, then they just walk away, and they're prepared to, you know, be right only maybe 55% of the time on their scalps, but when they are right, boom, do they get paid. But for the novice, for the new investor, I don't think it's a good idea for you to, quote unquote, step in and call tops. Let's just let this develop. You know, I mean, even this was just a nice triangle pattern that developed over a few days with a nice inside bar reversal, and it set up actually a short signal before the hack even happened. So my advice here is just don't be you don't need to be a hero here. Just if this thing is going to top, let it top. If it isn't going to top, then don't get in the way of it. You know, thinking parking garage, remember we started off the conversation a while ago with Stamp and that parking garage analogy. Well, I can make an argument, and this is sort of the message that I put out last night, was that I could very easily see, and actually I was showing it on things like Coinbase, I could very easily see a few little stop runs, and actually we have a couple shorter term harmonics that are suggesting that we could work our way up into this area here. I could see a few of these little stop runs just to punish all of the noobs that are coming in and calling tops. That's all this was, all right, we got a whole bunch of smart ass guys on Twitter who all think that this is the top because of this big sell bar. Let's go up and explore and see if we can run their stops. And sure enough, they did. And then right after the breakout, the thing just breaks right back down. So, you know, please go lightly, guys, here. You don't need to be a hero. You don't need to be the one that said this was the top. If anything, let's just give this a bit of time, and let's let the market tell us that it's topped out. off of the forwards contracts. And unfortunately, on this sort of run up here recently, I wasn't really participating in the forwards. We had a nice Coinbase long setup that I was tweeting about, and off of the lower time frame charts, and several of those targets were hit, and you could have watched those. But as the OKCoin futures were going through their contract expiry, the expiry was right here, and the new listing did this. So the irony of it all is that from the new listing event price, just after this candle, boom, right? Price really hasn't done a hell of a lot here, has it? And it's basically sitting right at that level. It's not even like it's moved, and gee whiz, there's the POC. So I could very easily see them, those guys, the whales, the sharks, whatever. I could see them put a top up in here. And I'm going to be watching closely this 970 area on the forwards to see if maybe they go up and eat this candle wick up here, and see if we can get any signs of failure above value up top here. But I don't have enough anecdotal evidence just yet for me to put a fork in her. And the interesting thing is some simple trend lines. This little trend line here, especially off of that powerful reversal low there, I think the market is really working with this trend line right now. And you can see how they just literally, they dumped the other night, was right back to it, then pushed to new highs, wash out all these weak hands, slammed it right back to this trend line, and you can see that they're just battling right here. If we're going to look at the market from market symmetry perspective, thinking maybe this is like a head and shoulders that might be developing here, something along these lines, just going to eyeball that, right? Something that looks like that. Then we should see this sort of market symmetry pattern develop. So let's really watch how price behaves, and you can see that based on previous sort of market cycles, you can see the up and down. So we're going to, we spiked higher, so the come down wasn't nearly as violent as the spike up. So a little bit of a disconnect there, but you can see how the market symmetry suggested there was going to be a lot of back and forth in here, and that's exactly what we're getting right now. You can also see, too, on the short-term basis for our sort of snipers out there, that I kind of thought, number one, we actually had a Hogue value play open up this morning, right? So we had a nice inside bar. We were above value. We waffled. And you can see how yesterday's value range, while it wasn't huge, basically Hogue's rule is if we go into value and stay in there, we're going to head down. We're going to test the previous day's value low. So we headed into value, we stayed into value, and ultimately we had to work down and tag yesterday's value low. So, there's not necessarily a tradable setup because most of the move, boom, happened right away, but it's still a perfectly valid sort of expression of that 80% Hogue value play. At the same time, too, you notice on the bigger profile, we're heading off into a bit of a valley here. Where there just really isn't that much interest in doing business in Bitcoin right around these levels. I suppose, if we move the chart in and out enough, we could probably find, this value low reference. But I think just on balance, what I think's happening here is we're just getting a little mini profile. Right? Looks something like that. Where 38.2 here is now representing the bottom end of the range and this key low. Wicks and tails like to be eaten. That's exactly what they did. They came down here, they ate up a bunch of this tail, and then they said, nope, I don't want to be a bear just yet. So this 38.2, I think, basically defines the bottom end of our range. I guess that's what this bracket I had on here was for. Something like that. All right. So I guess, there we go, value low down there. So bottom end of the range, 38.2. Top end of the range, obviously our old highs, and you can see all these wicks up here, right? This is going to be the battle point. There's our reload zone. And notice we have a nice little muoc sitting right at the trend line. Isn't that interesting? So my hunch is this thing's probably just going to bob around the trend line, and you're going to get some sort of quick spikes up into here. And then we're going to find out whether this thing's for real or not. So it'll be really interesting to see. I don't know whether I'm ready to, like I say, put a fork in her. She's done. I would be willing to give this a little bit of room and let this thing fail, put in a nice M top, and then go into, hunting reload zone, short setups, yada, 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 for our work back down into the support zones. I'm just not quite ready just yet to declare this bull over. And what I'm a little concerned about is I'm starting to see on Twitter and stuff, I'm starting to see lots of bearish references. That shouldn't be happening. If this really was a top and this was the end of the bull, we should see a lot of people on Twitter saying, all right, this is the buying opportunity. Now I'm all in here. So the fact that we're getting a lot of bearish chatter, ironically enough, doesn't help the bears case. So for me, I'm just going to, just give this a little bit of room. Just give it a little bit of breathing room. Let it develop. I'm kind of thinking head and shoulders-y here, but that implies, you can see all these highs up in here. That implies a test up into this area. And so a test up in this area, if we start getting some failure action, hey, I might just actually seriously consider a trade risking against these highs. Okay, that sort of summarizes the Bitcoin market. I've been a bit lazy with the blog posts. Yep, fill in the notch. There's a cute little notch right up there. Thank you, Michael. Been a little bit lazy with the altcoin posts. I probably should, finish this daily brief and get onto those and spend the rest of my day doing that. But we did a little bit of buying recently here in some of these altcoins. I'm kind of kicking myself. I should have had my stink bid at this gap here on Dash, but I worked it against these lows and that gap. But you can see she's coming down here, and it looks like we might even be filling in this gap with today's action. We'll see what happens here. I think, basically reload zone. We might have to get some spikes down into these lows, but on balance, little old lady, I don't mind buying down in here, looking for a test of these highs in the spring. To do a little bit of selling. EFL, my little Dutch coin, just basically sitting right where we bought it. Interesting battles going on here. I like the fact that they filled these gaps in here now with this candle. And you can see at one point today, this thing was actually all the way back up here. So, on balance, can't complain about that. Lisk, little disappointed. I even put out a tweet the other day saying, tis a fine looking bottom, but tis no bar in English. And what do? Bam, they go and break my bottom. Wonderful. Was kind of hoping that maybe we were going to form a nice inside bar day here. We are still technically in this candle body tail, beg your pardon, candle tail. So hope, fingers crossed, we can put in a nice little inside bar here, and this will look back in hindsight like it wasn't that bad of an idea. Having said that, none of these purchases are momentum buys. None of them are pound the table, you got to buy this thing now. They're all bottom fishes. And I think altcoins at best, if we're lucky, and Bitcoin has sort of run out of steam here, we're going to go through a period of, a bit of backfilling, and we'll see some dead cat bounces, and hopefully we'll pop off some doubles on some of the coins that we've been buying over the past few months. But I don't think we're in a bull market. It's going to take a month or two at least to clean up a lot of this damage, on coins like Lisk and, even the Dash, right? The fact that we broke to a new low here means, okay, now we got to take some time, form a new W, yada, yada, yada. So that's sort of what I'm looking for. No great hurry in altcoin land, and really on balance, and Michael's telling us that we should take a look at ETH. I like to watch these things on, actually, I'm very interested in ETH here. This is actually similar to Lisk, where we're coming up right against this tail here. And you notice the market's trying to form an inside bar. So actually, all of you sort of quote-unquote traders out there, I think this is actually a pretty low-risk setup here. You see how we don't necessarily have a harami, but we definitely have an inside bar trying to form here. And again, all our musings about Bitcoin. If Bitcoin does top here, I would imagine a lot of these altcoins will have a nice dead cat bounce. But in essence, this is actually a pretty well-defined risk window, right? That's not bad. I mean, I don't know in real terms what these dollars and cents mean to you. But on balance, if we get a nice inside bar reversal here, taking a shot against this tail low, in my opinion, is not a bad trade idea at all. I think momentum-wise, we're still very early, but I do like the fact that we haven't gone through this low on OBV. And we haven't broken any of these lows. So technically, we still could be in higher highs and higher lows. But you can see, just raw momentum-wise, this, just like all the other coins, this is going to take some time to clean itself up. No doubt about it. So, really, what's your trading plan? Michael, I think, had his awesome short idea up in here, if I'm not mistaken. Remember, it was the beginning of the term, wasn't it? Right? And we were musing about how deep it was going to go. Well, Michael, take a screenshot of that, right? So that's how deep she can go. So the point here is that, could we have a month or so of just backfilling, cleaning this stuff up, not even really putting in a bottom? Could we come up and just test value low here? Sure, no problem, right? For the traders, taking shots off of these lows here for even just a 38.2, that's a pretty damn good looking risk reward ratio. So really define what kind of trader you are, what does your trading plan look like, and that will define what kind of setups you need to hunt. And on balance, I look at a lot of these. They don't look too bad. Look at Monero XMR. It's actually going to try and put in a double bottom here, the motherfucker. What's another one that you used to like? You're a really big fan of Dash, aren't you? Dash broke some support here. I don't like that. If anything, that chick should maybe tone down her enthusiasm. Kind of like Bitcoin right now. If everybody in the public is screaming bear, then that means the damn price is going to go up. So if anything, what she should be saying is, well, we're just going to let the market do its thing. We'll let the market decide. Don't go and say, oh, Dash is going to kill Bitcoin. Then the damn thing's going to go down. But anyway, inside bars on this NXT trying to form, keep an eye on that. Inside bar on Ripple trying to form, keep an eye on that. Potential doji top on Litecoin, which would sort of validate the idea of Bitcoin topping. Factum, ooh, look at Factum. I mean, ugly looking volume and momentum here. Holy crap, somebody was just selling the shit out of this thing. Nasty momentum top. But, for those that are, and actually this is interesting because this is technically a reload zone off of the entire range, eh? Probably like a reload zone within a reload zone in here, right? So I could understand, especially investors. This is the POC. We don't really like to buy at the POC. Hogue would say that try and buy against value low down in here. So, I mean, I can understand just on a shorter term basis, and if this thing did turn in here and we started putting in market structure, then rock on. And, same thing as sort of the Ethereum, if for the traders out there, if you want to risk against these tail lows, the upside potential, of course, just for a test of these highs up in here and even a value high test is up into here. So, again, really a function of your trading plan. It's going to be kind of tough to step in the face of this overt bearishness. Something's happened here on Factum. That's a little concerning, the actual, the intensity of the selling here. Somebody really liquidated a lot of coins. So, for a guy like me, I might just put that idea on pause. But interesting location here for a potential turn. So if anything, let's keep an eye on this one here through the day. Wow, look at that chart. So fantastic example of reload zone. And this one has acted very well through this seasonal correction, eh? So methinks this is actually one that might perform pretty well going forward. Keep an eye on this bad boy. And of course, your upside targets are still test of value high and up into the reload zone here. I think it's in anticipation of the GUI wallet. Okay. Hello, Lydia. Nice to see you here. All right, actually, I think that's about the end of our Bitcoin and altcoin summary for today. So, Lydia, you popped in right at the end. Way to go. Actually, and who knows, is Lydia a man or a woman? Who knows? But Lydia, why don't we do you a treat? Give me an altcoin and let's finish. I don't even know what altcoins are. But if you can give me an altcoin in 30 seconds to review, we'll take a look at it. Hearing nothing, hearing nothing. Michael, you got a coin that you're interested in? ETC. All right, somebody comes in with ETC. That was quick, off the mark. All right, let's go see what ETC looks like. ETC and ETH have been having a real battle lately, eh? I was chatting with one of our alumni, JC, about this on Twitter there recently. All right, so, and do you have any particular exchange you like to trade on, Lydia? Polo, all right. Polo's about to kick off a whole bunch of coins, eh? So everybody get ready for those fireworks in the new year. Okay, so as I see it, sure looks like we got a cute little bottom that tried to come in here. That's not bad. I suppose you could make the argument that the bar that made the low plus the preceding bar would be sort of your, what we like to call the institutional fingerprint. So that would be sort of down in this area. So let's keep an eye on these levels here. And then, you know, if we're ever thinking about being a buyer, I highly, highly encourage you to follow the reload zone concept, because it sure keeps you honest. And I am a really big fan of working orders at what we like to call the line in the sand. Line in the sand. And that is a 78.6 fib right there, 78.6. So this is our sort of reload zone, 61.8 to 78.6, with the bottom of it as the 78.6. We like to call it the line in the sand. So if this is a bull, the bulls will desperately try and hold on to this level. Now, we often see that markets will come down and bottom, and woohoo, away we go. Sometimes, if the bull isn't nearly as strong, we might actually see the market come down and really test all of these key lows and then put in the bottom off the line in the sand. Seen that lots of times. So anyway you shake it, when we get down into this area, if you are a bull, this is where you really need to be paying attention. And let's really just try and avoid in the future chasing markets and buying them when they're up here. It's just not a good idea. All right, now some more sort of ideas for buying. I do like this tail. We often say that wicks and tails like to be eaten. And there's a juicy little tail there that could be addressed. And then if we look at previous areas where whales stepped in and supported this thing, we notice that there's a couple kilos here as well. See that? In fact, the bottom of that. So now we're really getting a real idea of sort of a buying location. I do like the idea that somebody came in here and put a nice solid bottom down in here. So if you're going to be taking a shot on this, I really like this zone down in here. And, you know, if you're, and really it's a function of what kind of investor you are. If you're a trader, then you're just going to simply take a shot against these lows. And if it breaks down through here, you just walk away. If you are an investor and you do things like really low risk management strategies, what we like to call our little old lady strategy, I don't mind nibbles in here, and you can just let this idea work. And if it has to plumb around and explore down in here, then because you took really low risk relative to your portfolio size, it's not the end of the world. You don't need to panic and dump. So really that's got to be a function of your trading plan and what kind of risk taker you are in the marketplace. Anyway you shake it, I do like buys down in this area. And the cool part about, if you can have the patience and discipline to wait for a move down into here, that if you do risk against these lows, then they often say that markets like to range 70 to 80% of the time. So if we do nothing more than just simply a range and you get filled with a stink bid, and let's even just say right at the line in the sand, and these lows do hold, and all we do is just go back up and test this horizontal support and resistance area, well, that translates to more than a 3-to-1 risk reward ratio. That's how we make money as traders over the long term. So that's sort of a trading perspective. Actually, this is interesting, Lydia. Do you see the potential head and shoulders that's trying to develop here? So we could go boom, to boom, to boom, to boom, to boom, hello, to boom. So off the higher time frames, because we made a new low here, unfortunately, the trend is still lower lows. And interestingly enough, lower highs and lower lows, you see they made a new low here. And then all they did was they just literally rallied it right back to the previous horizontal support and resistance. And can you see how important this level is right in here? These lows here and this high here. You see how important this battle zone is here? This is a monster battle zone. You see that? So all we did was we just rallied right back to the battle zone and then failed. You'll know that this is a bull, no doubt about it, if we can break back above this level up here. The problem with that kind of trading is that's not value investing, in my opinion. That's what we call momentum trading. And if you do buy against this breakout, then what that means is that your trade setup actually looks like this. We'll go long there. Maybe we risk to here, but Michael, what do we call this low of this W? You see this big W that's forming here? What do we call that low? Let's see if Michael can remember. Nope, not quite. Anyway, we call this the noob stop. Why do we call it the noob stop? Because quite often I've seen markets will come up and they'll come down here and they'll fish against these lows for weak hands, but they never do take out this low, and then it jackknifes higher. So, you know, the long and short of it here is if you do, and in my opinion, I think, you know, you can play your stops against this level, but I think you got to risk against these lows or basically the entire bottom. So if you're going to be taking this trade, then what that really means is like you got to get paid for your efforts, right? And Michael, what's the default level that we really need to justify seeing in the marketplace for us to really even consider taking a risk in a market? What do I want our students to sort of start with as a bare minimum that if you're right, you're going to get paid? Thank you, 2-to-1. So really what that means is if you do take this trade, then you have to have the patience and discipline to wait for a test of this level here before you even think about taking profits. Now, if you can do that, great. This is a core concept, this concept of inverted head and shoulders. This is a core concept in our introduction to trading module on technical analysis. And it is one of the core chart patterns that all of my people must learn. It is perfectly tradable. The issue here, though, is that a head and shoulders, typically its target is the size of the actual head and shoulders pattern. What this really is, and actually we were talking about this in the lounge just last night, what this really is this is my concept of the parking garage. And earlier in the video, we talked about how Bitcoin was doing its parking garage games. Where's that chart? That's what these 200% are. It's just basically a trading range. It expresses itself outside of the trading range, and it wants to do nothing more than just explore the new trading range. It establishes a trading range, consolidates, breaks out through the top of the trading range, and it wants to do nothing more than visit 200% of the next trading range, which leads me to believe that we really need to go up and tag this 1,000 number before Bitcoin's rally is done. But that's another conversation. The point here for your ETC is that, in essence, that's what this head and shoulders pattern is if we just do a 200%, if I can find it, where the hell's 200%? There it is. All right, there's 200%. There is the target of the inverted head and shoulders. So is it going to be easy to get your 2-to-1? I don't know. That might be a bit of a challenge. I do like the idea that all this trade represents is just an exploration. We often say wicks and tails like to be eaten. And Lydia, can you see this nice juicy wick right up in here? And then also this wick right up in here, and this wick, and this wick. So really all this trade is implying is we're just going to go up and explore a bit of these wicks. I think that's totally realistic. As well, and this will put a smile on your face, if we do just a simple retracement off of this rally peak, we won't even take the insane initial listing. We'll just go off of this range. If we do a good old reload zone, my hunch is if this head and shoulders does confirm, again, think wicks and tails. Look at these juicy wicks up here. And there is our reload zone of that range. And we like to say, let's see if Michael can remember, about how often how often do markets like to range versus trending? Anyone 80% of the time. So thank you, Lydia. Say 70% of the time, somewhere in that area. So what you're saying here is if you're going to take a shot off of this bottom, what you're really saying is, well, it kind of looks like this is a trading range, and I'm just going to simply try and go and buy in off the bottom of the range. Again, this is really more a function of what your trading plan looks like and what type of risk taker you are. I don't have a problem with little old ladies just going in and taking nibbles off of here, because this isn't a bad area to be buying against these lows. Not a bad idea. In fact, there's one site member that we have, Connor. He was basically very interested in this, and I thought that was pretty controversial. But as you can see, as time has developed, this head and shoulders could very easily come in here. No problem at all. But the problem here is we can't assume that this head and shoulders is in. We have to wait for it to actually confirm before we can declare that, yeah, okay, it looks like this is what we're going to do. And Michael makes a perfectly valid point that quite often we like to use the 50% level when actually figuring out price objectives. It's sort of one of those keep you honest indicators. You know, we have an old saying in the market, the bulls make money, the bears make money. But Lydia, what happens to those pigs? Any ideas? Survey says the pigs, they get slaughtered. So using the 50% level as a nice keep you honest level, you're not saying, hey, I'm expecting ETC to go to new highs. I'm not expecting for me to make $1 million off of this thing. Well, I mean, really, that's a function of, you know, what your setup is. All I'm saying is markets, according to Mr. W.D. Gann, Well, I think basically proved this concept that markets often like to retrace 50% of their previous moves. It might go up to the reload zone. This is actually where shorters, if people wanted to short, this is where they're most likely to short. The whales, the sharks, the institutions, right, against all these old highs and the wicks and tails. But just to keep us honest and keep it conservative, as Michael said, I actually like to teach our level oneers, the beginners to trading, use the 50% level as a nice simple profit objective. If we do that, then if this head and shoulders confirms and you take the trade, that almost works to a 5-to-1 risk reward. What do you think? Is that a shot worth taking? If you found a head and shoulders and a viable 50% level target, and this setup only works 50% of the time, literally a toss of the coin, Lydia, right? But if you're right, you get paid $4.84 versus if you're wrong, you lose $1. Should you take that bet? If it's a 50% odds of you working, what do you think? You're fucking damn right. You take that bet every single day of the week, every day. If anybody gives you odds of I mean, keep in mind, I don't know whether you were earlier, but I like to teach our students to use a 2-to-1 as sort of your minimum to justify you, literally risking your hard-earned money. In this case, this is a 4.85 risk reward. And it's under the assumption that this head and shoulders pattern validates, which it hasn't yet. But if this head and shoulders pattern validates, I don't really have a problem with this trade setup. And if you built a trading plan and this was basically what your setup looked like, and you came to me and said, here's my setups, I trade 4-to-1 risk rewards where a double bottom and inverted head and shoulders, triangle, any kind of, a trend change pattern that has some validity to it. And the target is nothing more than just a 50% retracement of that previous range. You got to take that bet every day of the week. And really the irony of trading is quite often this will actually be a very difficult trade to take. And you might go to the public and the public will be like, oh, what are you, crazy? That fucking thing's a piece of shit. But your setup said that if this happens and this condition is present and this risk reward is set up, I have to take the trade. And so this is, ironically enough, where a trader's life disconnects from sort of like what popular myth is that when these things actually break out, when the setups come in, nobody is usually getting too excited about them. It's ironic, it will be when this thing spikes up here, and it might even go up into the reload zone in some orgy of buying. That's when the public is all, ooh, woohoo, ETZ. And they're coming in and they're buying when you're actually liquidating and taking profits. All right, well, that was kind of fun to do. What do you think, Lydia? Was that worth the price of admission? Hope you learned something here today. Long and short of it here, with regard to ETC here, I don't mind hunting range trade setups down here. If you do take a shot against these lows, you got to risk against these lows. You got to make sure that you at least take partial profits on a test of the top end of the range. And, if you did do that trade and it worked, then stop to break even on remaining. And for the slower sort of higher time frame momentum players, I don't mind an inverted head and shoulders trade here. Oh, good. Your name's Patrick and you start level 1 in January. There you go. So we'll stop calling you Lydia. Patrick. There you are. Are you Patrick Stevenson? Yeah, it's my only Patrick I have this term. Anyway, nice chatting with you, sir. Welcome. So, Michael, what do you think? Is he in for a treat here? Are we going to rock his world? I'll tell you, Michael is probably an excellent... Actually, you know what? Why don't we leave the video at that? The public doesn't need to watch this. We'll talk a little bit about what's going to happen in the coming term. But anyway, I hope you enjoyed a little free sort of preview of what we do on a daily basis at therationalinvestor.co. And I hope you've enjoyed the Bitcoin summary for Christmas Eve 2016. All the best, everybody. Hope you can follow your trading plans. Try and always put yourself to play a position of strength. And I'll see you in the markets. All the best, and bye for now.